This conference will now be recorded.
All right, perfect. So, welcome again, everyone, to Matrix Principles, our advanced session. This is our second session. Um, Last week we went over price action, and we wanted to, get into more advanced price action. Right? There were times where if you were simply just using 24, 56, 94, you found that, you know, without context and without time, right, you found that those numbers represent supports and resistance. However, it really was more it was deeper than that, right? It mattered in terms of how you use 24, 56, and 94 in those scenarios. And we talked about how that obviously allows us to measure, our targets from short term, medium term, and long term ranges, right? So if you're perhaps the swing trader, you'll understand how to, set your measurement in terms of your targets, and you'll understand when to get in and when to get out, right? And a swing trader does not need to trade every single day, right? A swing trader is primarily just assessing the market, and obviously, as you continue to just view the market objectively, you'll understand where those swing points will come. Vice versa, someone who's continually trading intraday. Has to, of course, adjust with the ebbs and flows of the market, right? And so that's where price action will be key. But it is also more important to understand context, and we'll touch in terms of context in terms of seeing how that applied on Friday, and then seeing what the Dow Jones and what the London Stock Exchange, how that kind of gave us some indications even as early as the EU Open as to what the price action or what the US was looking for towards end of day. Um, Let me bring up our presentation so we can jump right in. Does everyone have voice capability, or even just messaging in the chat? I'd really like for this second section to be interactive, only because I figured that context is an area we'll most struggle in, and that's just natural, right? Because if context comes with understanding just more than one market, right? With price action, you can zero in on one product, one stock, one index, and then just use the context and the general context, right? And obviously your key times to kind of frame that trade. But obviously, as we look to get more powerful trades or more powerful analysis, um, it's important for us obviously to get the bigger picture, right? And the only way that we can do that is by understanding entirely, right, what's going on in the global market system. So before we jump into all that nutty stuff, let's just review some basics, right? You guys remember all of this. I think at this point, I already talked about the fact that you guys are all in the conscious part, right? And the more that you continue to work from here, right, and the more time that you continue to spend and invest into obviously your education and learning, the unconscious part, right, kicks in, right, and all of this becomes more natural, um, just as how you think about two plus two, right? It just becomes more of a natural reaction for you, more so than having to really think about it. But this unconscious part happens without me, right? Because this unconscious part happens as you continue to, dig deeper. It happens as you take real trade yourself, right? We talked about the fact that you know experience is honestly going to be your biggest teacher, right? Even beyond me. So just always keep in mind in terms of where you're at education wise, and understand that you have way more to go, right? So your potential is, like I mentioned, pretty unlimited, depending on how you push yourself. Of course, we already know our context, our key global terms, our price action. These are things I don't have to go over. We all understand our number theory advanced. Is there anyone that has a question with just the idea of number theory overall, right? I'm going to open this up for a question for the next 30 seconds. And if there are none, I will just move forward. But I want to make sure that if there are questions, we jump onto it right now. And if there are no questions, just shoot me a thumbs up if you can, or something like that. And then I'll know, who's good to go, and then I'll answer questions that we have. So yeah. So last screen was 75 equals 94, but I thought it was range from 72 to 77. You are correct. This is if you remember, this comes from this. Remember? And this was just the human eye, right? So when we come back and we see this, it's not referencing the the algorithm price action that we were referring to last week, um, and more so just talking about how we're looking at a different set of numbers than the standard or average trader. So you are correct, right? You are correct in terms of understanding that zone, but this is not 75 equals 94. Got it. Perfect. All right. And then let me check in here. Everyone is good, right? Shoot me a message, guys. I want to make sure that everyone is understanding this and we are good to go so I can move forward confidently. Good, good, good. All right, perfect. So Bravo, David, Sheesh. All right, let's just take a look at the markets here. What do we have? We have a Globex open, sell, buy. Okay. Let's watch the price action here, right? Let's just mark this. Let's mark the price action that we're looking at right here. I think this will be a key moment right here for the market. Let me just put it right here at 805. What we're essentially looking at here is we're trying to identify, or at least me personally, is how fast is the market really looking to get this rally up, right? Um, in my time, you guys can see it's 8:46 Eastern Standard Time PM. We have about more than 12 hours to the open, right? And so a lot of times I really try to factor in, okay, if we get above these levels now, I mean, how much higher is the market really asking for this to happen over the next 12 hours, right? But again, so I'm not in a trade at the moment. So I'm going to let this just sit and just place that line there and then just see how this reacts. If I had to, I mean, I would use this as a pivot, but just trying to get a good guess of time and understanding this. If we can't get this above, this is 13 plus 14 is the spread, so it's really 13, 8, 16 at the moment. If we can't get the NDX above 3.7, I think we go back to this 56 support line. This is just real time trying to understand the market a little bit at the moment. And so we'll see how it plays out. If it breaks out, then we are certainly headed for higher. I would venture to guess we're going to head to around this area here. Boom. That's pretty much it, right? These are the parameters that I've set for my trades right here. And we'll see how that plays out. So over the course of this session. So I just wanted to leave that there. All right, back to the learning. So let's take a look here. NDX of 37. Is that, quick question on this, NDX of 37, is that 24 plus MM long? Good question. Oh God, I hate this. It looks so ugly. 1 second. It's 3, 7. Boom. Right there. Just the just watching the momentum into that Friday close. So yeah, 100% it's market maker theory, right? You are correct on that, Sheesh, but in the moment, I was just watching the end of day close, and so that was a number that kind of just came back to me. But yeah, you're 100% right, because you'd be right in using that as a target in that instance. Right. But for me, that 837 level is that 837? Yeah, that's correct. Yeah. There we go. Yeah. Yeah. If the NDX breaks out above 837, I'm expecting for higher prices, and I'm expecting it to get to 870. 837 is roughly, that is 24 3 on the NQ, which is right there, right? And I would make that line my golden line there, right there. So yeah, again, she's you're correct. But even if you didn't know, much about the matrix principles, this is kind of where we go back into understanding how, you know, sometimes you could be right and not even know what the heck you're doing, right? And that's the unconscious part, because if you just looked at the end of day price action, you probably could have, maybe even guessed that level, or not guessed, but just referred to that level. But in the moment, yes, it's just made easier for you because you're able to just use the matrix theories and generate important levels, as you can see on that chart. Um, let's see, there are no questions after that, correct? All right, perfect. Yeah. All right. So let's jump back in. We are speeding through this review, so it's great. All right. This is what you're referring to, David, DK, right? You were referring to the 7277 key zone that we were talking about earlier, and this is that visual again. This price action you guys saw all week, right? This is price action that you guys saw. It's price action that you guys understood. This should not be 3.8. It should say 3.9. Right? And again, if you guys saw, we did this, right, ourselves. Right? We did this ourselves on Sunday. Um, wow, I must be super bearish mentally because, right, this is all price action that we drew up for ourselves. I'm specifically just referring to the 4,000 of this part. Um, this is price action that we saw all week last week, right? And it's essentially going to be the makeup of how we rely on alternative matrix theories, right? And a lot of times when, trying to understand when we put that into use will come from clues that we get from the EU, and we'll talk about that, especially as we go throughout the week, in terms of understanding, more and more about context. This week, our only focus will be on context. I think that you guys understand price action, but even as you look to make certain trades, you're always trying to understand, okay, well, I might be right at this price for the sell or for the buy, but I need to understand, of course, what the overall context, here is. So this week, I will look to, really speak on context, challenge you guys with context. And again, these are all things we're going to get back into later on. A big part about context is understanding weekly flow, right? Understanding what is essentially happening in Europe, in Asia, and the United States. And I say that because price flows, right? And the momentum flows from the market, right? You can take a bearish momentum, it gets muted in the Asian markets, it gets bought up it gets bought up slightly in the European markets, and then it rallies, right? Ridiculously back again in the US market, which we just mentioned, right, in the previous session would have been bearish, right? And all that would have taken is a 24-hour period. But that 24-hour period, the market was going through Asia session and obviously the European session before getting there. So I'm saying all of these things to kind of just get your mind, or at least build that kind of like foundation as we start looking and developing deeper into context, because context is automatically going to assume that you know price action, right? Because when you look at FTSE, when you look at DAX, and when you look at um, FTSE, DAX, and the CAC, right? When you look at those three, you just need to understand where the price is going next, right? It's not something that you need to consciously be looking at, right? Which is why context does take time to develop, right? And why it's more important for you to understand price action first, right? And time, because when you do that, then you understand what to look for in every index, right? And when you can understand what to look for in every index, then you can tell the overall story for the day, for the week, for the month. That's essentially what's happening. Because again, the reason why that's possible is because every single market is again connected, right? It's connected. We go back to the elastic band theory, and how that, essentially is how the markets flow up and down. Um, Weekly progression, right? These are all things that you know as well. Monday, Tuesday, Wednesday, right? Even Thursday, all chop. And then Friday, we had a nice little breakout. We're going to explain as to what exactly happened there. The holiday trading is a short answer, right, for the weekly progression. And again, guys, if I'm going a little too fast, just shoot me a message. And the reason why it's better for you to shoot me the message in the Discord is because right now, if you're sending me a message, I wouldn't see it, right? I wouldn't know that you're maybe confused on something or you have a question on something. So it is 100% better for you to message me in the Discord because I can read it and then answer you directly. Right? We understand the ideas behind Mondays and Fridays. We understand everything about market memory, right, and how it's very important for us to journal all of these things. We want to make sure that we aren't human. I mean, we aren't robots, right? We have flaws, right? And one of our natural flaws for many is just memory, right? We have a very short-term memory, so journaling is going to be key. Here we are. Markets are either obviously in balance, which we saw all week, right? And when you're in balance, market becomes more like this for you, right? The market becomes more like understanding, okay, I have a breakout zone here, right? And I didn't draw the line, but sure. And then I have the breakdown level, which I personally would have said would be 40.56. Oh, nice, cool. Ironic, right? I would have said 40.56 would have been the breakdown level. And then I would have said the 40.94 actually. 40.94. Wait. Yeah, 40.94. Well, not really. It's really 4.85. 1 second. Oh my goodness. What did I just do? Yeah? Nope. Technology. Come on. Don't feel me now. Haha. Yeah? Is that straight? It is, yeah, whatever. I'm going to take it if it's straight or not. Right? And so you guys saw all last week how I continued to mention that 40.94 was not seen for any particular reason, right? This is usually a stalling effort, right? And anytime that you have, you guys remember when I mentioned how when we're in between key times, right? And the market's chopping, what is that a sign of? Correct. Right. It's a sign of delay, right? The market is delaying. And it's waiting on obviously external factors before making its next move. And so when we see something like this in the market, right, or at least when I see the market in chop like this, it is 100%. It is 100% better for me to. It is 100% better for me to just simply establish my breakout zones, avoid trading in the middle, right? Avoid trading in the middle, and then from there focusing in on the context, right? And that brings us to understanding the FTSE, the CAC, and the DAX index, right? Um, that was where my time was kind of focused, right, in terms of understanding where we headed next, right? And the holidays played a key into this whole setup for the market, right? And I say the holidays because if you remember, last week the U.S. markets were closed on Friday, and last week on Monday, the European markets were closed on Monday, right? And so it was kind of a delay, or at least there was a time delay, right, between the U.S. and the European markets in terms of having that synchronized price action, right? And when you see that, right, and this is not the first time that the market has had that. This week, what we're going to do, we're going to look up previous holidays in the markets, right? And we're going to study those holidays because what you're going to see is that we're going to have repeated action here where the market is simply allowing one market to catch up with the other market before obviously they make the next move. And what does that bring you back to? Back to elastic band theory, right? And so remember that next time we have these holidays and understanding who's open and who's closed, right? And then understanding who made the move, right? Is the US closed and the European market dumped or pumped? Or vice versa? Is the European market open and the US dumped and pumped, right? And so understanding that in terms of like the holidays is going to be very, very key, right? Um, Obviously, there's only a certain amount of holidays that are out there in the markets, right? So it's not even necessarily this is going to be a common thing. But what you're going to find is that these holidays are used purposefully, I should say, right? I don't think that there's ever been a holiday where the markets didn't trade and the information that was generated during that holiday was not immediately like actionable within the next several sessions, right? And again, this is something that we're going to do, homeworks together. I have a couple different, ideas for the week, right? I talked with Sheesh Mack over the weekend as well, and just trying to have like maybe perhaps every single person, right? We have four in the group, including myself, right? We can have everybody just track four in the group, and then outside of including myself, that would make five. I mean, we can have every single person just track every day of the week, right? And just tracking the price action across all the six indices, right? Well, and I could grab two, right, and just take a look at it, or we could just ignore the NDX, which we honestly should, and that's probably what we're gonna end up doing. It'd be easier anyway. We understand that to be a Ponzi scheme. And what we're going to do is just simply just track the price action, right, at these key times, and then be able to kind of share this information with each other. And this is key because why? Because a lot of you don't have the experience yet, right, to actively set up FTSE, DAX, and CAC and just directly stare at these and then just watch price action, right? It's something that it becomes learned, it's something that becomes developed. And last but not least, it's important for you, right? Even though maybe perhaps you may have to watch the DAX index, and we may assign B to watch the CAC index, right? And you guys are monitoring the key times and understanding, the price action, and then sharing that information with each other. I doubt that you would not also at the same time try to peek over at CAC and try to maybe perhaps get ahead, right, of the knowledge that B is seeing, and then be presented with a completely different outcome, right, when B comes and tells you what he saw, right? And this is going to be great in terms of having, us all kind of just see the different perspectives that come in the market, because that's what you need to understand. Because 4094, right, SPX 4094 brought two people out, right? There were bulls, and then there were people that obviously decided that they wanted to short that level, which was not a good idea, right? And I think that you guys at this point understand why it was not a good idea, right? Just understanding that the momentum, understanding that it was Friday, understanding that it was going into end of day. Um, those are all great reasons, but understanding the context behind that as well was also going to be key, which is something we're going to jump into a little bit. Ponzi, yes, Ponzi. Um, so let's go back and check that NQ, see how it's doing. What's the resistance here, right? Could be a short. Your risk reward is kind of nice here, right? Because you could just flip. And so these are kind of like my favorite trades. The ones where I can get out here or just load here, right? And above here, I go long. The only thing is, the reason why I wouldn't trade is why. Anybody can answer me why? Exactly. Key time, right? Um, I can tell you guys, I know I keep telling you not to trade Asia, and sometimes it seems like as if like Asia can be fun to trade. Um, I say that from experience, right? And so that means that maybe some of you guys may have a better time um, with Asia. Now look at that, nice. Look at that move. It's probably going to do the breakout, which is nice. But I can tell you that for every couple good Asia trades that you have, you're going to face one that will kind of hurt you very badly. From what I'm anticipating in the markets coming up this next week or two, I'm definitely thinking that um, margin calls are on the way for both sides of the aisle, right? I've been out of the markets personally for a little bit, right? Just in terms of just trading, and we'll talk about maybe perhaps the reasons why, at least my strategies. And sometimes it can be beneficial to me, right? Or even sometimes it can be a con to me as well. We'll talk about the pros and cons, and why it's really important to understand, what kind of trader you are, because sometimes, as you are looking for a swing trade, you may miss out on the day to day, right? On some of the nice moves that happen intraday. And then sometimes as you're focused on, just simply taking this quick move here, right, and just saying, all right, that's my day trade, you're missing an entire bigger move, right, in a swing trade. So, and a lot of times it is it's difficult for most traders to do both, right? And it's really important as you start out to establish who you are and pick one, because then you can look at the market objectively. If you're a swing trader, you simply just stay out and you wait for the moments where it's time for you to swing. And if you're an intraday trader, then you just simply you don't FOMO, right? You don't FOMO into thinking that you're looking for a bigger move, because you only care about what's happening right now, right? And so we'll get into that. This NDX price action is very, very interesting right now. Seems like they want to moon this thing, so it's not exactly out of line with what I mentioned over the weekend. That at the moment, this is psychological warfare, but we'll get back into that in a little bit as well. I want to stick with the material for now, and then we'll talk about the markets later. Back to our keynotes. So the markets are either in balance or chop, right? And when they are in balance, the easiest thing for you to do is set your parameters, wait it out, and make the trade, right? And those are the best trades for anyone who trades futures, because a lot of times during this, it's just premium, 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 right? And then all of a sudden, oh, no premium. This is before the S&P broke its 4,000, if you guys remember. So this picture is pretty outdated, but I think the reason why I went back here to show you is that you could have also done the same thing with the S&P here, right? It's not something that you particularly needed to only reference back at the 4,000. We had levels here, right? 485 here, 456 back and forth. You never saw price get below even here. This was a weak bear attempt, weak bear, weak bear, weak bear. If you're looking at this and understanding the time difference between the US and the EU, and you're looking at the EU is rallying, rally specifically certain parts of the EU, right? I mean the FTSE specifically. Then you're looking at, right, understanding context a little bit better. Um, and when we're not in balance or chop, obviously we are in price discovery mode, which is where price action, right, and understanding sequence and numbers is going to be key to you, right? Because here, I don't need to understand anything about balance. I mean, I don't need to understand anything about sequences, right? Well, I just need to understand the breakout here, breakout, simple, right? Breakdown, breakdown, right? And when you get those kinds of trades, those are the easiest on your head, right? In terms of you understanding the mental capacity, you know, just draining you. These are the easiest trades, right? When you're in balance or chop, because it does require more patience, yes, but there's not much thought to it, right? Unless you want to do the scalping in the middle, and that usually just leads to more pain. So price discovery, definitely an entirely different market. You need to understand: am I in balance or am I in price discovery? Every single time you're trying to make a trade, you cannot enter a trade and not understand: am I in balance or am I in price discovery or trending, right? Because when markets are trending, there's a different way to look at it, right? You can rely on the sequences. You need to throw in context and obviously focus in on time, right? There's so much information that you need to process all at the same time as you know the market is trending and doing price discovery, right? Vice versa, there's not much you need to do here, right? Days like this or like times like this, I will mark the open and close certain markets. I'll mark the key times, and I'll usually just stay away from the one that's in balance or chop, right? So if the EU was chopping around, I would focus on the US, and vice versa. If the US was chopping around, I'd focus on the EU, right? Um, and this is only because whenever we're delaying, one is delaying because of the other. And if I understand that one is delaying because of the other, then all I have to do is just simply focus on the one that is currently moving, right? Because that's the one that we're waiting for confirmation to make the next move. This here is just elastic band theory, right? Except on a monthly view. Um, you can just take a look here, right? Again, saw price back here in 1986, 92. Price pushes up, everything pushes up. The Russell's pushing up, the Russell pauses here, right? Everything pushes higher. And just take a look at from when the Russell pauses and when everything dumps. It took a while, right? Mind you, these are months, right? And so this goes back in terms of just understanding time because sure, obviously I have no context, of course, of what was happening here, but I can venture to guess that around this pause area is where shorts started loading, right? And they just got wiped out for a while, right? They got fake pump before they actually got the drop that took the markets, of course, with it. And so let's think more about that, right? In terms of understanding how even bears, right, when they're right, they're wrong, and some obviously for bulls as well. But you can be right about a trade, right? Even as we talk about gaps in a little bit, you can be right about a trade and be wrong based on time alone, and for sure if you're wrong about context, right? And so you want to make sure you have all keys to the car or to the puzzle or pieces to the puzzle, or you are honestly just taking a 50-50 trade, right? And the whole point of the matrix is that at the heart of trading, it's all 50-50 probability, right? But you're looking to increase your probability at the end of the day, right? You're looking to use all these tools, combine it together, and turn a 50% trade into a 75, 80% trade, right? A 90% trade, 95% trade, right? And obviously, those higher levels are going to be way, 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 way harder to get to, right? But that comes with experience and time, honestly. Monthly view, weekly view, daily view, 4 hour view, and the 1 day view, right? And we talked about last time that we were here, right? And I'm glad that we're here. This is around SPX 4019. Which index do we want to see step it up and not pause or stall, or else would cause a definite correction? You guys remember? NDX, right? Correct. We had two different indices that we're looking at. We're looking at the Russell, but we have zero reasons to trust the Russell, right? The reason why we don't have any reason to trust the Russell is because it has been dying, right? And until the Russell clears certain levels and its demons, it's only going to be seen as a downside indicator, right? Because if you take the Russell right now, look at the daily chart. Let's do that right now together. If we pull up the Russell, and we look at the daily chart, I don't think I have to tell anybody anything, right? To just simply pull up this level here. It could be plus or one or two more, but whatever. I'm gonna leave it here because this one is the one I remember. Right? It's been a while with the Russell, right? We've been talking about this 2252 level for a while, right? And the last time that we were, you know, anywhere above it was pre-April, right? Before even the European market sell-off in the month, right? And that's all you need to know about the Russell 2000 at this point, right? Is that until it bases above here, right? It even made an attempt for here and then just smacked right back down and then closed below the level, right? Because heaven forbid, guys, I mean, they can. If you guys ask me what my longer term view on the Russell is, right here, right? This is where I think the Russell is going to be. Am I going to trade this idea now? No, absolutely, hell no, right? And it goes back to the monthly bears from back in 1986. You can understand that this is where it's probably going to head, but it's all about time context. But this explains in terms of last week's context in terms of why we were looking at the NDX and not the Russell, right? Because last week was April 5th, and we opened here on the Russell, right? And so we could have used it as a resource when it was here, right? We were paying attention to the Russell, topped off here, 82, no surprise to anybody, right? For 2 days before the Russell on what was it, Wednesday? Before Wednesday decided, you know what, forget this. And for 3 days, just decided to stay below this monumental level. So no, the Russell is one that, while it is an indicator, right, and one that we should watch, it's given us zero reasons to trust it at this moment. Does that make sense? In terms of why I'm choosing to ignore the Russell in terms of using it as a leader at this moment? Or does anyone have questions on that? And if you don't have any questions, just shoot me a message that you're good because a lot of this will be context, and so I want to just continue sticking with it. All right, perfect. Makes sense. All right, let's continue. So now we talked a little bit about, obviously understanding how time works, and we're going to look at this as well. You guys can see here that, in 24 bars, 24 daily candles drop, right? You can see here 58 daily candles drop. You can look here, 72 daily candles drop, 91 to 94 daily candles drop, right? These are all things that, we talked about before. We went over, the algorithm price action, right? And how this, this setup is here. And let's just take a look, guys, right? And let's do this as a case study. Let's all just simply focus on this closing price here. Can you guys see this algorithm price action right here just by looking at the close? Is that something that you can see? If you can't, just let me know because I'll go back to you and I'll just ask you a couple questions. We'll see it together. I'll leave it up for a little bit, but yeah, I'll leave it up right now for a little bit. If you can't see it, shoot me a message on Discord so that way I don't have to get out of this. We can look at it together. Right, we're only looking at the closing prices. right? Okay, that's fine. Yeah, and again, it can be a little bit, right? And so let's move away from just focusing on the closing price. Then let's look at all of it together, right? And let's just look at the sequence of events here. So on April 1st, we opened at 57, went as high as 58, went as low as 54, and then closed at 57. Would you consider this bullish or bearish? Right? For sure, definitely. You had an open here at 57. You dumped it, and you guys already understand 56 is a key number. And honestly, what could have happened, right? We could have done a couple different things here, and both scenarios would have been bullish in my opinion. I don't even need to know the direction, which one made the first move. All I understand is we opened here. We could have opened, dumped, and then went as high as here to close here, or we could have opened, pumped, dumped, and then closed here. But both scenarios give me a bullish bias just by looking at price alone. Does that make sense? Just on April 1st alone. Okay, good, perfect. Let's go back and check on our NQ. See how our baby's doing. Right? She's holding up. It's definitely not an hour or time that we should be trading, but she's holding up. So why fight it at this point, right? Boom, boom, boom. We'll see what happens here. I'm very interested to see what happens here. We might get like a boom like this, chop, 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 dump, pump. Who knows? We'll see. I'm not in any trades right now. Um, let's get back to this price action, right? And so we closed at 57. Next day, what do? We open right here, our opening price. We went as high as 63. We went as low as what, 56, right? And you see how we got that confirmation there, 56? And then we close here at what, 61. So I'm going to assume that we opened at 57, dumped to 56, pumped to 63, and closed at 61. Would you guys say that's bullish or bearish? Bullish, for sure, right? And you're seeing that, just understanding, just looking at the price action. Daily close, open, high, low, right? April 3rd, what do? We opened at 62, right? And mind you, when I see something like this, all I'm looking at is the close, the open, the close, the open. Quick question on this PA. Why is it a decimal point? It's a good question. It's just simply the product. I found something that was interesting to me, and I looked at the price section. I was, oh, well, this could have been done by anybody in the matrix, right? And we'll talk about what the product is in a moment. Look at the open. The open, the close, the open, right? We opened at 0.62, right? We went as high as 0.64, went as low as 0.67, and we closed at 0.69. I mean 0.59. Would you consider this bearish or bullish? For sure. Definitely bullish, right? Because nothing has changed. Exactly, right? Because sure, like there might be some bulls that got, like, fucked here at April 3rd, right? In terms of how things played out. But nothing changed at the end of the day. We still have a low that was defended, right? It was defended by even higher than this previous low. We made a lower high or a higher low, right? Right here. And then we close at 59. Naturally, what would happen the next day? We open here, we go as low as 58, moonshot, right? And we go as high as 7 points. Oh wow, we really moved, right? We moved. Now, go back and look at that price action in terms of how we can still close here, open here and still kind of have this pressure. And this is exactly kind of what's happening, even exactly what happened with the S&P last week, right? Because most people at the end of the day, Friday, were kind of like, oh, what the hell is this, right? Because all week the S&P has done nothing besides, chop around and create new bears, from the fact that it was stalling around from a little bit. But a lot of times, when we go back to the pressure cooker theory, right, and we'll go back and look at it for a little bit, you need to understand that sometimes that the market is very much actively looking to seek who it's about to kill next, right? And a lot of times in those scenarios, right, especially when those low volume scenarios, we're going to head higher, right? We're just baiting in as many people as we need to. And the move is always aggressive, right? The move is never kind of like a light move. And this is just another example of that, right? We have a low here at 0.567, right? Do you consider volume in tandem with price action? No, because I can tell you right now that this here was a low volume day, right? Um, I can do I consider volume? No, but I can see why you may want to consider volume. Ultimately, I think that it will lead you to the same answer at the end of the day, which is why I don't mind you using volume, and that might be the first time I ever said that about like an indicator. Um, I wouldn't mind you using volume, only because I think that at the end of the day, you're going to come back to the table and say, you know what? I came to find out that I didn't really need it because I can still see it. So I don't, but I would encourage you if you're someone who likes to use volume, to stick with it. Don't forget, obviously, the material that you're learning. But as you continue to look at it, you'll just find that okay, well, I can track volume and see it, but I don't need to look at the indicator, right? I can look at volume just from looking at price action. And maybe it's just something that you use if you're not someone that is going to actively be watching and monitoring the markets, right? So that's one that I could see myself, saying like, yeah, that's something that in the matrix would be quote unquote allowed. And so yeah, right. So we push down to 58, and then we move, right? And like this is just bad, right? You guys are looking at this 0.58 to 0.70. If you do this in the space that we're in, right, in terms of this product, you're probably gonna like triple or quadruple your money on a move like this, right? They counted on pips, so it's not necessarily this 0.58 to 0.70. They're looking at all of these numbers, decimal points, right? And they're counting those as points. Um, April 5th, right? If we have the close here at 0.68, would you guys consider that bullish or bearish? Bullish. So now, say we open at 0.68, right? What would you need in combination, right, with momentum to take out? Exactly, 77, right? You open up here immediately as a trader. The first thing you're looking at is, does it take out that number? If it does, you understand that where is it headed next? Back to 101 numbers. What's that number? 90. Nope. Nope. If you take out, no, you meant the downside. If you take out the 77 with momentum is the key. Perfect. Right? That is the key right there. Right? If you don't have the momentum, you will pause where? So let's say you take out the 72, 77 zone, right? I'll be clear on my question. If you take out the 72, 77 zone and you don't have the momentum, right? Because sometimes retail can buy up or just wrong people. They'll allow the wrong people to buy up, on price. But if you don't have the real momentum, where will you pause? Nope. Pause at 82. Perfect. Right there. You pause at that 82, 83 mark, right? And that will become your next key level in that moment, right? And so you see how you need to even be mindful of just the speed of the move and the momentum, just to understand if it has momentum and it takes out 77, it takes out all the things in between, it goes to 94. If it takes out 72, 77, it doesn't have momentum, you understand exactly where it's going to pause. And that is then would that be bearish or bullish in that scenario? Bearish, correct, right? Definitely be bearish. Because when we talk about, when let's say we're thinking about market theory again, right? And we're thinking about breakouts. What is the one dangerous thing, most dangerous thing that can happen in an attempted breakout? A failed breakout, correct. What you can't have happen is you can't have this happen in a breakout trade. You can't sit like this and have these two zones break out and then come back in. Mind you, it can be a retrace, but you do not buy that back. That you don't not buy that dip back. You will get burned. Just keep that correct. Isn't that what the rut is doing right now? Correct. Yeah, the rut is a piece of shit. Um, here we go, guys. Look, here's an update on our level. Right? Did we not just mention that look, we don't want to trade this time? It's gonna get you hurt. Trade it, you buy the FOMO, you get squashed. At this point, this thing is now setting up to just flush it, right? They're pretty much setting up to flush it and drop it now. We'll see how it plays out at this point. But yeah, if you went long, you're probably gonna get fucked in a little bit. The Russell, I mean, this thing is such a piece of shit. The Russell, if it takes out 2214, 2215, it goes to below 2200. Um, that's just a fact. So let's just put that right here. That's a 1409. I would say maybe 2303, 2304, but I like to say round numbers just to say round numbers, so I'll leave it at that. 2300 below 2215. So that's the Russell there. So we have an index that leads as a downside and an index that leads in an upside, but both can be different or the same index. Correct. And it just depends on where they're at in terms of price, right? Because right now, the most bullish thing that can happen for the S&P is for this Russell to close above where and base above where? 55.2. Yep. The Russell closes and bases above here and gets to tackle this part, this 2280, with momentum. Where's the Russell going from before it takes out its next pause? Nope, not 2294. Exactly. 2103. 2301. I should say 2301. Or no, 2303 is the number you guys said, right? Yeah, that's correct. 23, yeah, 2303 to 06, correct. Right? And so, and if you, mind you, if you were sitting here and you were saying that I'm going to be on a confident trade, right? And this is where the confidence comes in. Say you come in and you sell this and you get fucked. Where are you going to get fucked to? Right? And you know what? I might put 2316 only because I like to stick with the extremes when I try to set my stops. right? Because our zone is 03 to 06, and it really could be 03 to 07, but 03 to 06 is fine. It gives you a good level of identity, right? And the thing is about these numbers, guys, it's not because anybody can throw numbers out anywhere. It's about how you read them, right? Because why do we not give two shits about 22222, right? These are numbers that are just random, but the ones that are wow, nice, right? Nice trade. Um, Again, a reason why Asia is going to get you killed more often than not. Sell it, give them a big pump, drop it. Now watch the speed of how fast they drop this thing, right? Because you got people that are stuck here. These you took out the Monday or the Friday buyers, right? The Friday buyers and some early Momo folks, well, they're taking out. The real money, in terms of retail dumb money, came in here. Oh no, not here. This is where the early folks, the early folks came in. The retail dumb money came in here, right? And you're gonna get a washout here, clean them out because what did they buy at the right price? No, they didn't buy at the right. I mean, they didn't buy at the right time either. Wash them out. Take a stick here, right? So where who bought at the right price? These 12:30 buyers and these 3 o'clock buyers. 2:30, 2:30, but there's 12:30 right here. I venture to guess that the low tonight or key level will be not, it will be 12, 13, 7, 5, 4, going all the way back to this 12:30 key time here when the market decided to go boom, boom, dump, boom, and go. Right, this 3 o'clock was a little easy, but whatever. I didn't even come back and touch it. You stop loss it perfect anyways. Actually, no, let's change it to 5-6. I like that 3 o'clock. I believe more algos are active at 3 o'clock than they are at 12:30. So I'll stick with that stop loss for sure. Back to the presentation, guys. So, balance chop, price discovery. Let's move forward. As we are here we go. Okay, so we are looking at the next day, right? We're looking at April 5th. We open at 0.68. Oh yeah, we talked about where we go. We'll go to 9.4, right? And what would happen at 9.4? If you took the sell at 9.4, it gave you a sell, would have taken 7 points off. Would you swing this sell here after looking at this close? Would you swing this? No. And tell me why you would not swing. Correct. It's not below 82, right? It's not below 82. You take your money out in a situation like that, right? You let the trade go out. You break through the 77 wall. You tackle 94. You sell 94. Sell it back down. You see it close at 87. You're out. If you do that, the next day you don't die, right? Because the next day the market opens at 0.87, and look what happens again, guys. You guys need to remember this pressure thing, right? This pressure cooker is very, very serious. 0.87 takes it down to 0.85. 6 is that bullish or bearish when you see that as the low, and you see it bounce back up from there. Bullish, right? And are you going to short 94? Hell no. Hell no. Right? You would definitely not sell 94. You're going to get washed if you sell 94. Right? And just take a look at how that worked out for you. You sell 94 in a situation like this, it comes back, it just rips you a whole new one and takes you all the way to 110 before coming down and closing where? 1.07. Let's move forward. The next day. And all right, so let's go. April 6th. Is that a bullish close or a bearish close? Bullish, right? Bullish as fuck. The next day, we open a little lower, right? We go as high as 1.06, and we hit as low as 0.85, and we close at 0.918. Bullish or bearish? Bullish. Bearish. But more, all right, so let's see. I like this. I like you see how we can interpret different prices. So someone mentioned that we're looking at pointed five, right, being defended, and so it's still bullish. Whoever said bearish, tell me why you said bearish. Explain a little bit more in detail as to what you're thinking. And if you're bullish, if you said bullish, think about what we're going to hear next as to why someone may think that this is bearish price action, right? Because it tells you in terms of like when you see these numbers, you're going to get the same reaction out of people at every single number. These are just repeated events. These numbers draw out the same reaction every single time. So I'll wait to see what the answer is as to maybe what clues we were getting for bearishness. Bearish closing force. Okay, got it. I understand. So one is saying that we closed below 94, right? And the other is saying that we closed above 85, right? And both are great and correct answers, right? One is 101, and the other is just taking it a step further, right? Because say, for example, 94 was your short. What's the MM on that one? 84. What was your low? 85. Bullish. Bullish. Right? Bullish. Next day, we open 0.92. We go just a little bit lower, right? We go back a little lower to the close yesterday. Probably just some more pressure cooker stuff. And what happens? Shoot it up. Are you going to sell this 107? Hell no, you're gonna get fucked. Right? First test, best test. You're going to get fucked if you sell this 107. Right? And it works in this scenario though, right? Because we open here, we go as high as 1.07, right? And we close at 102. So you get like maybe 5 points, right? The next day, we open around the same level. You get, more pressure cooker, 0.98. And then what happens next? Another rip. And we close at 106. Now, let's say you were just a spectator and you didn't get involved with any of this trading at all. Tell me why April 9th was the most bullish of all indicators at this point. And what would your targets have been if you simply saw 106 close after looking at all the history of the price action that came before it? What would be your targets? All right, we have one that says 24, 48, and 56 price targets. And I agree. I wholeheartedly agree. Let's take it into a little further, right? But not sure why 1.06 is super bullish as you mentioned. It's bullish because you need to think in terms of remember those questions that I keep asking and you guys kept saying hell no? Somebody said hell yes. Right? When we see these numbers, like think about, for example, right? Let's the reason why I'm bringing all of this up, guys, is because this is what happened last week to the S&P, right? This is exactly what happened last week to the S&P in terms of price action. Um, and so it's not just because it closed above the 106 level, but it's also because of how many times we've already been at that level. How many times do you want that level to provide a resistance? And how many times do you want these failed bear breakdowns to occur before we just simply head for new higher prices? Because I've got a 0.85 that has never been seen. From there, I have a 0.91 that keeps getting seen, but gets bought up every single time. And then now here we are, 1.06. We open at 1.02 on April 9th. We go as high as 1.08. We go as low as 0.98. We close at 1.06. The next day we close at 1.06. More pressure cooker, 1.04. What happens next? We literally moonshot. To where? Was that a level that you could have guessed? You literally every single one of you have guessed this level. 0.48. What did that give you? 5 points to sell. The next day, we open at 1.44. We'll go as high as 1.49. It's the same resistance giving you resistance, right? And we go down and we go as low as 130 and we close at 138, right? What would you think might happen next? What would you guys guess? April 12th. What do you think happens next? What do you think that high of the day would be? And what would you think that low of the day would be? And where do you think the open doesn't matter. I just want to know what you think the highs and the lows. Yeah. Yeah, I like that answer. I like that answer. Haha, nice. Wow. Guys, I mean, straight up down the line, right? I'm looking at three of the same answers. I've got one high of the day, 56, low of the day, 34. I've got one high of 56, low of 34, question mark. I've got another one, 1.56, 1.3 low. All of you have the same exact answer, right? And we'll find out what happens later on. Let's take a look at the NQ. What's our NQ doing? Oh my God, what a demon. Wow, what a demon. As I'm telling you, like, this is why you don't trade Asia. Like, where could you have been right? Right? Like, where could you have been right on any of this? Right? You buy, killed. You sell, killed. Right? Now somebody's trying to FOMO in, thinking that they can go higher. People down here, so, oh my God, it's a mess. I'm telling you, just avoid Asia. Go to Asian countries. Yes, I love Asian countries. Um, avoid trading the Asian time zone for the margins. Um, Guys, this was XRP this past weekend. Um, this was XRP, right? Um, this is XRP. This is something I just watched all weekend. I wish I could have traded it. Right? I wish I could have. I probably should have. But I didn't. But all along, just following that price action, I would look and I would see 124. I said, okay, we can probably get some pullback here, maybe back to 14. Pull back to 14. Okay, 14. I'm gonna buy. I maybe might look at 106 as some buys as well, just in case we get tricked out over here. It gets pumped back up to 30s, the 34s, right? 34s, it holds, it pumps up to even higher to like the 40s. I saw 48. I saw 48, and I knew immediately like, this is the easiest trade. I sold a little bit. This was your S&P last week, guys. Pressure cooker. When we look at this, when we look at this mean reversion, we couldn't and shouldn't go higher than 40 before it played back down. You guys understand that? Just go back. That wasn't really an open-ended question. I'll give you that. So, okay, got it. Everyone's saying, oh, nope, that's from before. But I'll jump into it, and then we'll see if that triggers any questions. All right. So what we're going to do here, guys, we're going to look at some scenarios in terms of price action in the CAC, the DAX, and the FTSE, right? And we'll explain a little bit. We'll go back into detail in terms of what happened last week, guys. In terms of the price action, we'll jump into context and time right after. Guys, for the future, I'll even send you guys a picture of this. If you really want to understand what is exactly is happening or coming next in the markets, I would go back and just, if you can replay, if you can't, just simply just try to just how I was able, just how you were able to go back and look at the history of this XRP trade and just kind of just look at, numbers that stick out to me. Like, okay, yeah, that makes a lot of sense to me. Go back and check this 3,800 to 3,700 range. You are going to need it. 100% you are going to need it. My memory is not 100% 100% of the time, guys. And the reason why journaling works is because if you journal something one day and you're journaling it again, you will realize the fact that you're writing the same information again, right? And once that clicks and you have that much information beyond you, you simply go back and compare, right? Like, wow, this happened last time. You're just reading it back and forth, right? Is it happening in the same way or is it happening differently? If it's happening differently, jot it down, write it down. It's a new experience for you, right? So yeah, market theory, you guys understand that we're either balanced, we're testing one side of balance and back to another side of balance, and above it is a breakout. Gaps, yes, let's talk about gaps. Guys, this is the number one theory that will hurt you if you don't trade it with context and pricing time, but mostly context. I say that because when you read this, right? When you read this and you read the fact that if we're above or below, then we create one gap, of course, right? And as a general rule of thumb, obviously we're not going to fill that first gap. Why? Tell me why we will not normally fill that first gap. Someone quickly. Does anyone know why we would not normally fill that first gap? That's because the person who wakes up in the morning in their pajamas sees this and wants it to fill immediately. And that is a retail trader. That's just a very simple and direct answer. If I see a gap and it fills, cool. If I see a gap, I'm not trying to sell that. I promise you, I would never see a gap, one gap, and try to sell it. I don't care if it works out. Kind of like the China rule. I can care how many times this something works for you. I would never. In this scenario, it proves to be true. And of course, this is DAX, right? And if there's any index that fucks more than DAX, I mean that fucks more than the NQ or Nasdaq, it is DAX, guy. Oh my god. No. Guys, if you ever needed a better reason to not trade Asia live, right? You're seeing this thing live. You cannot win a trade like this. You will just lose left and right. If there's a trade that, I mean, if there's a market that can, funk more than the Nasdaq, it is the DAX. There we go. We have our second gap, our third gap. If we reach three gaps in a row, right? Obviously, the second gap increases our probability, right? So a second gap is something that you can fade cautiously. You always fade the second gap cautiously using price action time and influence, right? When you get the third gap, you are looking at confident trades because the third gap will likely fill, right? There's a very, very, very high percentage. and that these gaps will fill. Now, here is the retail trader when I say fill. And if you're with me, just don't mention that you're here. I wanted to make sure that everyone is here for this. While I kind of am at all with the NQ Nasdaq. Wow, this price action is just yeah. So that's two, right? We have two sets of buyers that got fucked here. Well, technically three. Technically four. One, two, three, four. Couldn't even count him too. Maybe some five. Right? Four groups of buyers completely just killed. NQ low so far is 6.7. Does 6.7 seem like a number that makes sense to any of you guys? And if I told you that the spread here on the NQ is 14, what number does that trigger to you? Right? 81. If I go ahead and look at the NQ high, it's 39. What's 14 plus 39? 54. Right? 54, 53, correct, right? So seeing it get down to 81 does not surprise me. Right? It does not surprise me in the slightest at all. I don't like 81 as a number for support. Let me tell you guys that right now. I can buy 81 in terms of understanding context and confluence, but be very careful. You want to buy and sell the numbers that you know. Right? So let's make that your own golden rule going forward. Buy the sequence and buy the numbers that you know. What do I mean by that? Simply this. When I pull out the 30-minute chart here on the CAC, and we go back as far as, what date is this here? We go back as far as even just going to March. All right, and let's pick someone fun. Let's go to January. I like this one. This is DAX? Yeah, this is DAX. Yeah, DAX probably the same as that thing. Here, here, first. DAX is such a, it is such a tool of an index. I'm telling you guys. All right, perfect. Guys, do you see the price action here? Do you feel like you could trade this one? Let me know right now. Do you feel like you could trade this now, just by simply just reading it out loud? We have a close here of 13,921, and we gap up. Is that considered bullish or bearish? 13,921. That's a close for cash DAX. Bullish or bearish? Correct. Bearish. Definitely bearish close. Right? I would consider that bearish 100%. Right? You want to know why we consider this bearish? Because look what happened before. Right? We had a move. It's already been proven that it's bearish because look at this. If you go back and look at the previous price action, right? You guys are saying because it's 2.4, that's 101, and that's correct. You are 100% correct. If you needed more confluence in terms of understanding previous price action, just go back. The high here is 45. The high here is 43. Remember how we went on the XRP crypto, and we were able to go back and just simply look at certain numbers and understand, okay, well, not breaking these certain key numbers, right? And so understanding all of that, I may have a bearish bias on this close. Now, when I see this open, and I see this open at, and I see this, where did it open at? 13,978. Can you trade this? Can you guys feel like you could trade this right now? You have a bearish bias given the previous close and understanding that it's not taking out those key numbers that you had before, and yet overnight you get a gap up, and the gap up goes from opening from no, let's say no, let's say this isn't even like I'm trying to trick you. I'm trying to say, would you be confident, and maybe not particularly trading your own personal account, but be confident in understanding what is happening next and taking those trades? Not confident. I'd be confused. No problem. That's good. Because all that means is the more screen time you get, the more those answers change. Bearish close, and we have one gap, and we have one gap here, and we have, I didn't even count the gaps for this one yet, and we have two gaps. So we have two gaps, a double probability, right? So probability increases, and we have an open of 78. That's above our 77 number, correct? And no, this is during regular trading hours. This is during the European cash trading hours. Remember, so it's 3 a.m. Eastern Standard Time for them. For me, that's 8 a.m. in the UK, right? So DAX is open in Germany, right? So DAX is open. So this is definitely a cash session, and that's why, guys, I mentioned that it's important for us to know when numbers break, right? Because look at this. We get our open here. We get our push higher, right? And what did I mention in terms of momentum? Right? I mentioned that if you have momentum and you take out if you have momentum, you take out that 77 level, where do you go to next? $94. 94 would be here, right? Now, let me go ahead and do this. Let's go ahead and plot a line at 94 here. Is this the first test you're getting at 94? Would this be the first test? No, it's been tested several times, correct, right? And you guys see how just by zooming out, right? Because theory, yes, price action, sequence, algorithm, boom, go from here, bearish close, pump, 94, short, should work. Should work if you were only looking at this. But only fool hasn't realized. Because remember, the same way that you guys told me hell no to this, would it not also be a hell no to selling 94? And if that's a hell no because of all the previous price action that's happened before, right? Because look what 94 did. Did 94 not already do its job already here? Right? It's done its job. The market tried gapping over it and it got rejected immediately in one day. Well, a couple of days actually. The market said no, and in fact dumped it right after. So now we come back at 94. Who visually would short this 94 because they've seen it work before? Retail, correct. And now you guys are understanding what we were referring to back at this DAX situation. If you guys go back and look inside the Matrix chat room, right? Go take a look around that February-ish time that we were talking about DAX and understanding, hey, look, these guys are thinking that they're going to short 14K. The problem is that they may get a little pullback, but if they go back and short 14K, they're going to get killed. You guys remember that? So here we go here, right? So back to it. So we have our 94. So let's say now all of a sudden you understand that context. What's your levels? Guys, tell me. You can trade this thing yourself right now. Tell me the level. If it was not 94, what would it be? Nope. It's not. Oh, it's not 0306 then 24. Remember, those 101 numbers are meant as confirmation. We're also right now focused on sequential price action. So understanding that that zone that you have right there is correct, what would you do with MM? Or it has to do with MM, I should say. 14, correct. Right? And correct, yeah, correct. Again, same thing. Yeah, if you want, you fade the 94 sellers because there's this just like how we had this past week 40.94. This is the same exact scenario right here, guys. Because somebody's selling 94, somebody's buying 94, right? So yeah, below 94 short and above 94 long, but correct, right? You're correct in understanding that 14, if you sold at 94, would be your zone, right? Now we go all of a sudden we go up and we add 14. Yeah, a little short of the market there. All right, let's put 14 right there. But take a look. If you sell 14, what would your stop loss be? Well, no, no, actually, no, no. I apologize. This would technically be like your zone for your stop loss. But what would be like your mental of understanding? Like, you know what? Is this really going to kill me or no? 2-4. Like I mentioned, that is your confirmation, right? Just like when we were at 4-8 and you guys were telling me here, right? What did you guys tell me that you guys were looking for confirmation if this was going to be actual resistance? What was your answer right here on this? What was coming next to the high? The answer was 1.56, was it not? Right? Almost all of you mentioned that. Now here we go. When we go back to here we are. Oh my God, guys, are you like you guys understand why I'm telling you this is a Ponzi scheme, right? Wow, even sometimes I get it's just wow. All the buyers killed, sell it, and here we go. We're going to new time, new day in about 4 candles. So what? Flush, 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 flush. Buy. This is patience, right? I'm just thinking out loud at this point. So what? Flush, 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 reverse, pump, pump, chop, pump. Yeah, who knows? We'll see. All I know is that these guys are about to get fucked in a second, maybe about an hour or so. Back to the lesson, guys. No questions on this so far, right? And the reason why I'm trying to incorporate as much price action into this is because you need to know what comes next. Because how can you look at the Dow Jones and understand what level it needs to break, and then compare that level with what level that the CAC needs to break, and then build context? These are things that you need to be able to understand. And this is why this week we will aggressively focus on this, right? Every single day we will work to make sure that this is something that's understood because it's natural right now for it to be so new. But like I'm willing to take the time to put it out there so that it's understood. Only because it's worth it, number one. But number two, it does you zero and it does you more harm, actually, if I were to just simply just dump out all of this information, right? Like if we jumped in and we started talking about this DJI and the Europe confluence and price action from past week, it would do you harm, right? Because in the moment, you wouldn't really try to understand why were we looking at the Dow Jones 33480, right? So stick with me there. So price action in terms of context, guys. Let's just stick with this basic rule here. So now that we're jumping in feet first or head first into context, start with this and write it down. U.S. trends begin in Europe. Simple. Any questions? I'll wait on that. I'm going to leave it right there before we continue. U.S. trends begin in Europe. I'm going to take it with the no questions that we have no questions. So I'll say it one more time. U.S. trends begin in Europe. You guys remember last week? And trend as in price discovery or chop? Both. Both. Good question. Um, you can determine chop days simply from looking at the European index. In this context, I'm referring to bullish trends or bearish trends. But the real answer to your question as to whether or not you can use the EU to determine a chop day or bullish day or bearish day is you can use it for both. But in this context, and just keeping it simple for now, we're gonna just leave it as a trend day as price discovery. Remember, guys, I mentioned you guys saw me message, right? I'm pulling all screenshots here. I'd like to see the Dow close above 33480 for confidence and bull, right? That's me saying that right there. I'd like to see Dow close above 33480 for confidence and bull. Now 33450. To where the Dow Jones later on went and closed above 33480. Going into Friday, we mentioned that we had two key levels of interest. One, the Dow 33480 and the FTSE 6937. So let's go take a look at that FTSE 6937. Confidence in cash index? Correct. Only always ever cash index. Let's take a look at FTSE, shall we? This better not be the futures because I don't see any gaps. Okay, weird, but sure. Whatever. Okay. I kind of do feel it, but oh no, this is better. I like these viewing units. All right, so apologies about that, but let's just take a look at last week, right? You guys remember who was closed on Monday last week? Europe, right? They were closed last week on Monday. So they open here on the 7th, 3 a.m. And what happens? Boom. Open from where? 68.41. I'm sorry, I apologize. Opens from where? 68.51, right? Goes as low as 68.41, closes at 68.77. Bullish or bearish? Goes as high as 81 and then closes at 77. Bullish or bearish? Bullish. Correct. Goes bull. Does this bullshit for a little bit. Key time. Drop. Pump. Come back into the US Open. And where is CAC? I mean, where is FTSE? Right back to the resistance that it was, right? So think about this. From the European Open, we pumped to the resistance, chopped around, pumped around. This right here, when you see this 530 global key time sell and not follow through, there are only two possible outcomes. Break resistance, bullish day in the US. Make sense? Let me know if there are no questions. or if you have any questions. Correct. Vice versa, 530 comes and breaks down. Would I short here? Nope. I would not short here. Why would I short? Where would I short, guys? Where would I be convinced to short? 56. Perfect. Yep. Right there. And so before we even go back, right? Before we even go back and look at later prices, right? Just understanding what we just broke down right now. Let's just go ahead and plot a line at 56. Holy shit. You know what? One of you guys knows how to do this better than me, and we're going to talk after this. So 56. Coordinates 6856. 6856. And extend. All I need to know is that, all right, well, if we go below this, I'll have a little bit of confirmation. So when I see this happen, what is the other, if it's not, if we don't, I mean, if we don't have a dragon coming, what's the other option? Well, what are the other two options in the market? Long or, and Sheesh, you mentioned it, chop, 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 chop. Because you had trend as in price discovery or chop. I was just giving you a wink, wink. Um, and so yeah, those are the two possible outcomes, right? You get your pump, and guess what, guys? What did this pause at right here? 8-8, 8-8, and it closed where? 8-3 and 7-8, 8-3. You know who else? We'll go back to later. We'll come back to that later on. We close at 8-3, and when we close at 8, actually no, guys, look, what's that? What's the actual close? I hate when sometimes they do this. The actual close is really well. What would you say that closes on that candle? 8-4. 8-4. What number does that tell you or remind you of? Nope, not 77. From 8-4, what does that tell you? 9-4. Yep, plus 10. 9-4 minus 10. Correct. Yep, exactly. 94 minus mm. Right? So all I have to do is understand that I'm being protected right here. Or at least the resistance is being protected right here. Right? And so there we have that as our R for now. And we can label it there as 6884 and just let that sit, right? And so what I'll do is I will duplicate or copy this and I will paste it. Trend line, nice. And I'll put it at 6884. Market does this, bounces back. Mind you, the US hasn't even opened yet, guys. You could be up at 7, you could be up at 8:30 in the morning and be doing this analysis. Right? You wake up in the morning, you look at this price action, you can put all the stall pieces together, right? You look at this, you understand what the resistance is, you draw your lines, you put your theories together, you understand where your breakdown level would come, and then you see that what has happened. Well, now all of a sudden, before 9:30 has happened, what in the world have I already identified? It's a bullish price action trend, right? But like before we even get to the US Open, right? So like let's say the US opens at 9:30, right? Before this US Open, right? What do we see at this point in the market? What does it remind you of? We have zone here, zone there. chop, and that is balance, correct? Correct. Exactly. Right? Market tried, what did the market do? Right? Broke, tried to break out, came back, bounced, bounced, made an attempt, break out. And guys, ask yourself, why would this happen? Why something like this? Why would it happen this fast? What's the idea behind this happening faster than normal chop that you've seen before? What's the idea? So I'm at the holidays. Holiday catch up. Wink, wink. Right? So FCSC is like, all right, well, I need to get to wherever the hell these guys are at. Right? So it breaks, it does its normal sequential price action, but it doesn't have time to wait a week. Right? Because the S&P doesn't have time to wait a week. So boom, breakout, close above where? Close above the same resistance. And look at that. This close was what? This close one fucking point, right, above your number that you've already identified. You would identify this number at 7 a.m. So at 7 a.m., understanding that you have two zones, the moment that you get a close above, and by marginal as literally as 1.32, right? Because your number is 6884, and you get a close of 6885.32. Bullish or bearish? Bullish. Bullish, right? Bullish price action takes us to where? Where do we even open the next day, man? That's how you know it's bullish. We open at 6899 above what resistance? The 94 resistance, right? And why would we automatically kill them overnight? Why? Was that the first time? Well, I mean, why would actually? Hold on. Think about that, right? Why would we kill the 94 shorts overnight? Did that happen during the regular trading session? It didn't happen during the regular trading session, right? It did not. And how many gaps is the FCSE on? Correct. Not during the regular. This gap up above this 94 level, right? Because remember, if the MM protects you at 84 and then takes you to 94, you understand 94 is your other level, right? Let me go ahead and just place it there so we can see it all together. 94. It's important that we work throughout this together because it's a series of just kind of telling yourself a story across 6 indices. That's really what context building is, which is why it can take so much time, which is why we're going to focus on it very, very heavily this entire week, and I'm going to push you to understand it. So we break above this 94 overnight. Would you be chasing this long at the open? Let's say you were trading FTSE. Would you be chasing that long? And why would you not be chasing the long? Two reasons why you should not be chasing the long in this scenario. First move tends to be fake, correct? And 3 gaps up can fill down, correct? Because we go back to our gap rule, right? Let's talk about gaps. If we reach our third gap, you have an all-in gold mine short. And it's not an all-in gold mine short to fill all the remaining 3 gaps below. No, again, remember guys, we're not the typical retail trader. Holy shit, come on, just give me the flush. Please, get this over with. I wonder what the general chat is saying at this point. Maybe some panic? If there's panic, then this is bullish. Not futures. Okay, no panic yet. Maybe in 30 points, there'll be more panic. We'll see. Right? So this is on its third gap. So you not only have the fact that here we are, we've had 3 gaps, and you understand what's coming, right? And we have an open above 98. Let's see what the price action did. Price opened at 98. Was FTSE chosen for context because it was clearer price action versus CAC? Correct, but we will actually go back to CAC as well. We'll look through all of them, right? And here we go at 98 here. And what do? We pump. Where do we go as high as? I should say as high as first. We go as high as 2.4, right? Well, you could say 2.6, but you know what I'm thinking of. 2.4, right? And we come back and we close at 1.8. That 30-minute candle, right? At 3 o'clock. We open here at 1.8. And what do we close down to? Or what do we go as low as 0.4, close at 0.6, come back down, and gap fill, right? This is just price action and theory. So when I say an all-in short, I mean you can all-in, again, all-in, do I literally mean all-in? No, right? When I say all-in short, what I'm primarily saying here is that when I say all-in short, what I'm primarily saying here is the simple fact that you're going to likely get that move, right? And as long as the price, this is where we get price action and time confirming everything together, right? Because what's happening here? Why? Of course, it happened at 3 o'clock at 3 o'clock in the morning, right? Eastern Standard Time, right? That's just price action. That's time, right? Because what would have essentially happened before the 3 a.m. key time? What would that be considered? What would that be considered, guys? Noise. Correct. Correct. Right? That would be noise because this is essentially what happened in the FTSE then, right? Right before this European Open, right? Let me go back and pull yes. Yes, will. No times. Oh, okay. I'll go ahead and add the key times. Okay. It should be showing key times, but fine. Regardless, you guys understand on your own key times chart, right? That anytime before 3 a.m. is simply noise, and that the first move is always fake, right? Like we talked about. So we get them open, they try to buy it up, pumps it up to 2.4, comes back, closes at around the 17, 18-ish level. From there, it opens, takes us down to 0.4, closes at 0.6, takes us down to 96, takes us down to even further. We have the gap fill. No, we don't actually gap fill. Holy shit, FTSE is about to blow up. Yeah, FTSE is gonna die. Yeah, this is gonna be a wild week for sure. Because guys, this is something. This right here, not a coincidence. Let me just point this out. When you see this, you mark this level, right? Just understand that for future reference. When you see something like this, you do not forget this key piece of information because this is done. Why? Because when you pull it out like this, can you see this? Can you notice it? If you're visual trading gaps, just a retail dickhead, right? You're just thinking, okay, one, two, and you can easily misplace the simple fact that this did not fill its gap, and it must fill its gap, right? These are algorithms; they don't make zero mistakes. Make zero mistakes. So we have a close here, a 4.7 close of 6885.32. Next day, the low was 6888.58. This is not considered a gap fill. How can our algorithms be so precise and so organized and so logical and yet make such a small mistake like that? Simple answer, they don't. They don't make mistakes like that. done on purpose. Because now, what's FTSE trading at still? 3 gaps, correct? It's still trading at 3 gaps. Look what happened when we made an attempt at 4. So if you thought that 3 gaps, right, was a great, confident trade to take, so you don't count wicks as gap fills. Well, we could, sure, I do count wicks as gap fills, but FTSE didn't close here; it closed here. So if it closed here, I mean, we still got some space here. Like, let's. Oh, I can't even zoom in, but right, with the red candle, we have an open here, close here, and then looking at the next day, we're looking at the next day, we're looking at a low here. So sure, I mean, it comes in within the range of the prices, but the gap is here, right? Because think about this, because you don't get to pick and choose. What I mean by that, did anybody remember about the 6885? Was this shit an accident? 1 point. 1 point give you this. Why wouldn't they also purposely just not fill it? Right? You don't need to know what's going to come next. All you need to know is that this is dangerous and that you just need to just remember it. As simple as that. Because now, what happened next, right? The 4th gap, right? We had a 4th. No, we actually didn't have a 4th gap up, right? And this day we just sold off the open, right? We had a move, we sold the open, came back within the price of the other range, came back, bounced, and then now let's take a look at this price action here, guys. Let's take a look at this here. So we come here, we don't get the gap fill. Is that bearish or bullish? We don't get the gap fill. Okay, I understand what you're saying. So let's think this is actually amazing. I'm glad you said bearish because didn't I say that anybody can perceive levels anytime in the way they want differently, right? And so yes, I agree with you that this is in fact on a more macro level very, 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 very bearish. But intraday traders, what would you think that they would understand this as to be? If the gap didn't fill, we have a gap that's open, and we have all these people that are trying to fill these gaps looking at this visual. It doesn't fill. Intraday bullish, correct. Right? You get the bullish move, 530 confirmation, boom, market goes. And tell me why the market decides to do this around this time for the US, right? Drop the US. The reason why is it's more so, again, a delay method, right? Hold the US off. What do we close at here in the FTSE? We went from, we went to here, we closed at 42. Bearish or bullish? You know why at this point. I don't think I have to say anything. You know why. Bearish or bullish? Bearish. It's so bearish that the next day they decided, you know what, let's go ahead and just really try. Like, how bearish are we? Right? Closed at 41, 42. Next day, they was like, all right, you know what? They were like, okay, let's go ahead and just try it out. And hit 50. Couldn't push up above 50. Right? What would you need to have seen in this short-term price trend to understand that this is bullish? What's the confirmation you would have needed right here? 56. 56 would have taken you to where? 56 takes you to where? 72.77 with momentum. And with momentum from that zone, where we go? Nope, not 82. With momentum. $94. Without momentum, we naturally will pause where? And that is a bearish or bullish sentiment at that point. Would that be bearish or bullish if we close at 80 below 84? Below bearish, yep. Thank you. Yep. Bearish, 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 yep, bearish. Right? Can you explain why is the gap fill not falling bullish after again? Yeah, certainly. You want to know why it's bullish? When you read this, why did it go up even though it didn't fill? Correct, because gap fills are so gaps. The idea of gaps are just simply about strengths of buyers or sellers. Correct, and so just think about that on the more basic level. Like, okay, gaps are created by the strength of more buyers or the sellers, right? Who's wrong and who's right, right? So that means overnight there were sellers who tried to sell the double gap, right? They got fucked because the retail bull bought it up overnight. What does that mean in that scenario? What that scenario means is bear is early, even though right means early, so it's technically wrong, and bull is just wrong, right? And bull's wrong because bull has no sense of time, just euphoria, right? So if that's the case, then when we open, then we should gap fill. If we gap fill, then the sellers who are looking, right? Because remember, if you read this here and you see this three gaps rule, you're selling, right? You're selling. You're looking to get the gap fill. If you don't get the gap fill, what will that cause every seller to do? Close their position, buy the cover, right? And think of that scenario with what happened with the S&P last Friday, right? Everyone's like, okay, why is it going up this ridiculous amount, right? Or how fast? Why this fast? End of day on Friday, you have sellers all covering, right? Cover here, cover here, cover here, cover there, cover everywhere. Everyone's covering, right? So let's get back into the PA again, right? So here we are. And, oh my goodness, I got lost it. There we go. Perfect. Don't get the gap fill, boom. And we close right here, right? And we closed at 6942. Next day we tried for higher. We didn't even get the 56 confirmation. 48 doesn't hold. We sell, we sell, we sell. We come back to where? The low being 6906. You guys see the program action already at this point? It's necessary for you to see this program price action. Because again, if you cannot see this, you cannot compare FTSE and SPX and understand where SPX is supposed to go and understand where the FTSE is supposed to go. Here we go. Now, mind you, this is what I'm saying, guys, when I refer to the fact that Every level has a time and place. 6906. This is not an easy sell. You've got to have balls of steel to buy this. So almost a 40-point dump. Boom. On a level that's not been confirmed, right? Because look, I didn't write any of the levels down, right? All I did was just come back out here and say, okay, boom, 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 balance, breakout. Because remember, you don't trade in the middle, do you? So if you have these parameters set up in your breakout, balance, balance, right? Hold on, let me edit this better. If you have these two parameters set as your breakout, and you actually do break out, hold on, there we go. And then you actually do break out, right? Then, oh my goodness, I'm getting myself off at this point. When you dip back into the zone here, right? When you dip back into the zone, where in the hell would you know where to stop? Just by knowing the sequence, right? We sold in 48 and went down, caught it right here. Caught it here, and that tells the story for now, right? And not only did you catch the 6906 bottom, what did the market do to give you the confirmation that you were right? What did it do? But what does this close give you as an indication in terms of as a buyer when you buy that level? Is that bearish or bullish? And why is it bullish? Take a look at this. So if we came back here, we bought this 6906 bottom, and then here we close at 6915.75. Keep it simple. You know the answer. 10-point move. Yep, exactly. Exactly. Right? You get the MM. Correct. You are 100% a chop zone. And remind you that so the chop zone is not really a particular zone that you want to trade, but you can. Right? It's definitely full of a lot of fuckery. But you know the levels. That's what I'm trying to get you guys to understand. You know every single level that's coming to you. I promise you, you know. You just don't have the confidence yet. But you know everything that's coming in the market. So that's CAC. I mean, that was DAC. I mean, that was FTSE, I mean. And here we go. CAC. Below was this, 6106. Closed above. Right here. 4-1. Went as high as where? 5-8 or 5-9. Came back. Closed 4-1. Bullish or bearish? Bullish or bearish? Nope, not bullish. Closed at 4-1. Bearish. Correct. Under 48. Next day, the market does what? Goes back up to do what? Confirmation. Yep. Sell a little bit. Come back down to 2.9. Not enough. Market does what? Pumps back up to this level here. Retrace. These are all 30-minute candles. So, yeah, that's a good. Yeah, my bad. Right? So we go up to here, 5.9 extension. Come back down here. Go back up to 5.6. Right? Come back up here, making attempts. At this point, you've identified 5.6 as the real level. 5.7. At this point, even now, fours are starting to go away, go away, go in. And this is the chop zone, right? Because you're right about the sell, but the market's going to make you wait. And that's why you technically don't trade in chop, because you could be right. But look at all the bullshit that it makes you go do before it actually rewards you with some pay, right? Because even here, you get your 2-4. If you take the 2-4, you're smart. If not, you just got to just sit and wait on it again, because what the market does goes back again, right? And if you hold on to your guns and your nuts, you get the real move. The real move comes down here, 19, bounce, right? And then we push all the way over here and we close at 30. Bullish or bearish? Actually, no, I apologize. This 11:30 close is 6130. Bullish or bearish? This was a trick question, my friends. Price action is bearish, right? The only time I would have been bullish is if maybe we came back and we tested 15, 14, 15, right? See what the reaction was there. Because remember, we only trade the numbers that we know. What the fuck is 6919 or 6930? I don't know these numbers. And I won't even try to make any sense of it. When I see numbers like that, I'm like, okay, cool. I don't understand it. Somebody else does. Good luck. Right? I would personally just ignore that. So, and then look, this move here has more to do with context and time than it does the CAC itself. So here we go. You get your pump. You get your from your 30. You get your pump. It goes to where? 66. Pauses where? 71. Bearish or bullish? Bearish. Sell it, sell it, sell it, sell it, sell it, sell it, sell it. Goes to where? 46. No surprise there. Goes back up. 6-1 here. And then the close is, and we closed at 6165. Above 48 and above 56. Bullish or bearish? Even out of all the bullshit that it did, all you do is simple focus on your numbers. Stick to the numbers that you know, right? In context. Try to hit 70, 72, 77, couldn't do it. Sold off, came back, bounced off 48, went ahead, closed above 48 and 56. Bullish or bearish? Bullish. Only that's the only analysis that I need to do. That's the only anal that I need to do sometimes. And it can get deeper than that. We're gonna get into it this week for sure. But I want to start by looking at things very simplistic before we jump in and get very complicated, because you're following along with me right now. When we start to rev things up and get things to be a lot more complicated in terms of looking at more different dynamics, right? Then you will be glad to know that at the very fundamentals, you understand what's going on. Because I need you at this point now to look at CAC, DAX, and FTSE and tell me what's going on. And that's what you're going to be able to do by the end of this week, right? Or at least early start next week. So boom, we didn't get our move at 72. Boom, came down 48, bounced off 48, closed here. And naturally, what happened next overnight? Boom, we opened here, 6164, pumped, and we went above 77. Again, was 77 ever seen? No, because 72 was the low end of our zone, right? So it's natural that even at the high end of our zone that we may have what is happening at the high end of the zone. Just tell me logically, if you sold 77, you have 77 to 72 as a zone. As a bear, are you nervous at 77 or are you confident at 77? Tell me. If you're in that bear suit, no, think about it. Think about it. Would they really be nervous at 77? Right? Put yourself in the shoe of the trader who's going to be wrong ultimately. I have a sell zone of 72 to 77, and I've sold 72 and I've been correct. And now price has now gone up and it has hit my 77 zone. Retail is always scared, but they always act illogical. I'm here to tell you that they add into that move, right? I'm here to tell you that they add into that move at that point in time. 72 worked, and that was part of my 72, 77 zone. So why won't my 77 work? I'm going to add it. And what does the market do? It rewards them, right? It gives them, okay, fine. You want to take that? Wait. Here we go. It rewards them, right? Right here. And ironically, that's when the investors, investing.com drops their news. I want you guys to pay attention to when the news comes out. It's very funny, actually. Right? News comes out, they get the sell. They don't even get a real sell, right? You go from the 77 mark, you open up here 76, you go down to 73. Ultimately you go down to 67. But like, and say, why would you go to 6-7, guys? Ask yourself that question. How do you know these guys are about to get fucked and they get a low of 6-7? How do you know they're literally about to get fucked? 77 minus MM low, right? You're reading price action. You're reading what the market makers are doing when you see something like that. Mind you, you can only see this when you're out of the market. You can't see this when you're in a trade. When you're out of the market, objectively watching this, you're reading and telling yourself the story as it plays out all day long. Right? So there we go. Go from 77. They sell it, they're selling into their position. Here we go, we come down. And the reason why they would be wrong as well is not just based on price action, because you guys were, maybe some of you guys were correct, just basically based on price action. But let's go line it up then. CAC at this time is 49 at 4 o'clock, right? 49 at 4 o'clock. And DAX, 49 at 4 o'clock. And then from here, we'll jump into a couple last quick little things. And then from there, we're going to talk about what we're going to do this week. And then we'll move on. I expect, guys, this week we may have to do 2 sessions. But those next sessions, I may do one-on-one with you guys and connect with you privately. Like I'll just reach out with the invite. I know your schedules are up and down. But just because of the content, right? Just the heavy content of all of this, and just the time, I want to make sure that this is something that we can get through and have you guys answer these questions for sure, or at least get all of your questions answered. So here we go here. This is DAX, right? DAX has been doing this bullshit, so I ignore DAX. Just like how I ignore NDX, right now I'm ignoring DAX. Because DAX is not set up to do anything except hurt a lot of people right now. Why? Because DAX is either going to do this, right? Or this. It's going to head higher, right? The problem is an index like DAX is going to do both, right? And that's the most dangerous thing. So you see something like this on DAX, just know the market is something is coming, right? Something is coming because what do we have confluence across all of these indices now outside of the Russell when it comes to gaps? They all seem to have about 3 or 4 generated now, right? That's not common. Usually what we have is one index with 3 or 4 gaps, and that index is the one that will converge, or at least have everyone else converge when it fills, whether bullish or bearish. To have almost every index that we watch and trade have the same setup, this has not been seen in a long time. I have journals and notes on a lot of information, guys. I don't have as much as I have. I don't have as much on this current scenario because it is that rare, right? It is that rare. Giving you guys like, you know, giving you guys like an idea of like what I'm thinking on the S&P. I mean, and I can say this here because I understand you guys are not going to go out tomorrow and buy weekly puts, right? But I mean, Guys, no, 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 no. Because this is easy. This is easy. And here is all the dip buyers. And here's what hell will end. Guys, this is really more of a macro view. Um, but yeah, we'll talk about this later on in the week. But you guys should understand that these next, if you haven't been journaling, the information you're going to get from this um, will help will help a long way, in my opinion, personally. Um, so let's just ignore the DAX for now, and let's just simply look at 4-9, 4 o'clock, right? And again, why is this important to us, guys? Because when we go back and we look at when we go back and we look at the FTSE, right? And you guys are telling me about, and we're looking at this price section, right? And we look at this 4 o'clock time, right? What was the low here? 6906, right? What about CAC? What's the low here? 6967. Would that be bullish or bearish on the CAC? Take a look at where it's coming from, right? CAC, it's close. No, it's not closing. But at this time right here, right? What do we have? We've got back into the context a little bit. We have the 71 shorts, right? The 72 shorts, I have to say. They sold and they got paid. They get back into their zone. What are they gonna do? Reload. They reload, add some news, boom, sells it off to right here, 67. An perfect display. When you see that happen on CAC, when you see that happen on FTSE 6906, that is called confluence. That is when we have multiple indices giving us signals on key levels that we already understand. We go back and we find the ES and find out what did it do at that exact time. Right here. Right. In that same candle. Look at these small candles. Small, 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 small. Boom. 88, 103. Guys, I'm gonna leave it right here for right now. This is a lot, but I mentioned context is gonna be important because context is when we take everything. We will take everything and make a story about every particular index. After making a story about every specific index that we look at, we will then create one bigger story. Context is not easy to do. And context is not easy to do, especially when you're trading. So a lot of times when I'm really trying to build my own context or understand context, it's important for me to step away out of the trade because I cannot see these things. US trends begin in Europe, and we will look at that in detail next week. These are some of the things that we have to talk about shortly, right? SPX, NDX, the Russell, the Dow, the CAC, FTSE, and the DAX. These are your indices. That's it. These are your indices. There are no other questions in terms of understanding. Am I looking for when I speak about context? I'm looking at these indices primarily. Do we ever look to Asia for guidance? It's a trick question. Do we ever look to Asia for guidance? Great answer. Guidance, yes. Traded, no. Right? Guidance, yes. Tradings, no. Yes. Asian markets are best used when the US-EU relationship is not in sync. And this is what we're going to do this week, guys. We're going to introduce 3 different markets and how they give us direct insight and specific things in terms of what we're looking for in the SPX, NDX, the Russell Dow, the CAC, FTSE Index. We're looking at the Nifty 50, the ASX 200, and the JTOPI, South Africa, Johannesburg. The Nifty will drive us, right? They handle our key time. That 5:30 key time, they handle that. ASX, that's pre-market for EU. And South Africa, that's the US Open. That's something we're going to jump into a little later this week, guys. Every week, the market has a pattern. And that pattern is identified Monday and Tuesday, plus carry forward information from the previous sessions. This is not something that you can see on a chart. How do I know that? Did you guys look at a chart to do this? Not at all. When I think about time and price, think about 40.94, right? This week is going to be a big week. We're going to be focused on context. And if you don't already feel it, context can be heavy, right? Context can be very, very heavy, so much so that we went over our time already, right? But I don't care. I want you guys to understand this. The whole point of me doing all this is to make sure that you guys get it. And so I leave you guys with something that you can take with you the rest of your life. I'm going to stay on here for any additional questions, but I'm going to end the session here and let you guys marinate on all of this. And of course, go back and hear the re-recording, because the biggest things that we did today is ensure that you guys get the price action down, right? It might have seemed a little repetitive, but it was necessary. It was necessary because you cannot look at all of these indices and be thinking, where is it going to go? You need to look and feel where these are going to go. Because when you can understand and feel where all of these indices here, these 7 indices are going to go, or you feel it, you understand up, 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 down, buy the dip. Because these are all supporting it. Up, down, up, actually up, 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 down, down, down. You have a divergence between the two. Let's look at Asia. What's ASX doing? Because Asia, ASX, is going to impact what? It's going to impact the EU pre-market. So if ASX is bearish, they're likely going to get the head start on the bears here. And guess what? Here's the messed up part about the ASX market. If they're bearish and they dump it and the EU rejects it, that is a bullish 3% day or 3% equity day on the S&P. And we'll look at previous examples of when that occurred. This week, I'm going to have assignments for everyone, but tomorrow I'm going to go ahead and assign everyone the assignments. These assignments are not anything that would require you guys to step away from what you do personally. It's more so for you guys to just simply track time, right? Just like how you guys saw me do something like this. I got this in an Excel sheet, copied and pasted it from like crypto or Coinbase or something like that. They gave me this data, right? And this is so the information is out there. All I'm going to ask you to do is just go find the information. When you find the information, I'm going to ask you to try to make a story of the information, right? But for now, it is better for me to just end it here and move forward, because believe me, we can go forward, right? We can go forward, but we're about to hit a key time here. We're looking at the markets. If you traded Asia, you definitely got killed. Oh, that's not. Oh, look at this! Look at this guy, rut in the butt, right? The Russell, just doing the Russell stuff. I meant to pull up the NQ. All right, if you look at that perfect wick, 804 right there. Guys, you guys are watching price happen in real life, right? You guys are watching real work happen in real life. You guys are watching the algorithms play out in real life. Some people can't decipher these numbers the way that you guys have already, and you can only continue to push yourself to like do better, right? And this week is the week to push yourself because you're going to see everything unfold. I look forward to this week. I look forward to all our future sessions. Shoot me messages on any questions, right? This week is all about context, and we will understand context. So let's knock it out. Let's get some rest, and tomorrow we will jump right back in and we'll get a good understanding of context and use that to power our trades. Okay? That said, I'm going to go ahead and end the recording. I'm going to end my screen share. I will hang around here, guys, for any questions, and we will follow up.